We have our CNBC All-Stars lined up here, don't we?
They're standing by with the pulse of the markets today. Also joining us, special day today, trading coach Doug Hirshhorn. He's chief executive of DrDoug.com. All right, guys, let's get started today. Bob Pisani, what's everybody saying about this? Is this going to be a rally that's going to be sold, or is it going to hold?
They like bringing back the uptick rule. I've already said previously how I personally feel about it, but I just want to point out, more importantly, is the mark-to-market comments. Bernanke says he's not in favor of eliminating mark-to-market, and Barney Frank has said that too, but both have said it should be tweaked somehow. So the devil's in the details. How do you tweak it so, for example, it's a little more flexible? How do you do that? And that's sort of what's getting more attention than bringing back the uptick rule here.
Sharon, let's talk about oil right now, because we're seeing prices ticking up. We got this demand report from the Department of Energy. 42.06 is their price forecast for the year. What do you hear from the traders on the floor in terms of what their forecast for the year is?
Well, a lot of the traders here, they want to see oil get to $50 a barrel. They think it's going to happen, ahead of this OPEC meeting, but they don't think necessarily that it's going to hold there. Talking to a number of analysts, not just here on the floor, but elsewhere, what they're looking at right now is the fact that, we're not able to hold the highs of the session in light of the fact that this latest report on demand shows another decline in demand and a revision downward in those demand forecasts. We're expecting to hear similar things coming from the International Energy Agency on Friday, as well as OPEC on Friday, with their monthly reports ahead of the meeting on Sunday. So the demand picture looks like it's going to continue to weaken, and that could put a cap on how high they think prices could go.
Scott Wapner, you've got the strongest market of the day right now, up 6% of the NASDAQ.
Yeah, and Bill, we're actually back above the old November low now of 1316. Right now, the Nasdaq's sitting at 1345, so that's nice to see. Today's sharp rally to the upside really just speaks to the fact, more than anything, I think, that the Nasdaq was beaten down so much, and so many of these stocks were just beaten and battered. And you're seeing just tremendous gains to the upside across all of the major sectors of technology, from the chips to the internets to the computer hardware stocks. Dell, for example, is up 8.5%. And I'll just rattle off some for you. Oracle, RIM, Yahoo, Apple. I mean, at least 5% to the upside today. Research in Motion up 9%. Microsoft better than 7%.
All right, Doug Hirshhorn, let's go to Dr. Doug, because you're looking at affairs of the mind. This seems kind of a bipolar market, doesn't it? It's up, it's down, but actually mostly it's down. I'll take up. But what do you think?
Is it about fear or fundamentals right now?
Well, I think what's happening is the overreaction is about fear, and it's actually about good news came out, and then the rally happens, and people jump on board and start to elevate the good thing. But the people on the street, the smart guys, the smart money, the investors, the guys, the real professionals, they're actually looking at that this is not the beginning of the next bull. They are thinking it's a little overextended on the top end.
So they're still fearful.
Yes, they are fearful, and they are conservatively picking their spots on the way up. My concern is just that as good news come out, people want to look for reasons to participate. They want to jump in, and it's a human urge. We've been down in the dumps so long. We want to feel good, and we might have something that elevates us.
Sounds like the traders on the floor, Bob.
Yeah, and look, you can look at this from 2 points of view. One is, the cynical point of view is, here's this 20% rally that we had in November and December. So now we go up to, 850 on the S&P 500, or somewhere along that area. And then we come back down. That's the cynics. The bulls, and there are a few of them who are trying to come out of their bunkers, are arguing that clarity on the Obama bank plan, now that we're getting the better outlines of where it's going to go, where the government is largely going to simply make low-cost loans available to people who are buying and limit the amount of actual buying the government is going to do, is a preferred method. The street likes that more. The bulls are arguing better clarity here, a better program is going to help put a bottom to the bank stocks, and that's going to help put a real bottom to the market.
Let me get a couple of email in here we had for you, Doug, from viewers. One was from Audrey, and she's just beside herself. She doesn't know what to do. She's paralyzed with this kind of fear, and she wonders, how is it possible for the average investor to gauge what an individual stock's true value is during times like these?
Okay, so Audrey, you're not alone in that mentality, but let me tell you a word of advice on the psychology of it. It's not your job to figure out the true value, and that's a big mistake. People think that in the consumer, it's their job to figure out the value. It's not your job. Your job is to figure out what you need to do for your future and what your time frame is and what your investment, and disconnect from the P&L of the market and the movements. People get caught up in the P&L and they start to watch TV, and if it's up, they're feeling good. If it's down, they're feeling bad. Again, your job is not to determine the value. Let the market determine the value, not you.
Doug, Doug,
Yes.
Sharon Epperson, I
Hi,
have
Sharon.
a question about gold, because I'm wondering how traders or individual investors who thought, I'm going to diversify and get into gold back when, perhaps 6 weeks ago, when gold was toward its highs, how they're feeling now about a safe haven play that's under $900 an ounce.
It's almost like a safety blanket, isn't it?
Yeah,
Exactly.
I got to tell you, I spend a lot of time asking my clients, what's the big deal about gold? I don't get it. You can't eat it, you can't consume it, you can't put it in your car. It's like a psychological safety event, and it has, you have to treat it as such, that it's a thing that people know historically you can go to. It's considered a safe resource. But at the end of the day, I think that if you're trying to speculate on gold, you're in a loser's game.
Had another email from Lauren, or I guess it's Larry, but he points out studies done on students in the classroom measuring their expectations against their actual performance. And the bottom line, this was too long to try and fit on a television screen, negative expectations can become self-fulfilling prophecies. I mean, we all intuitively know that.
We know that.
But if we go into the investment environment expecting to lose money, won't you?
No, I mean, look, in any other wave of life, you think positive and good things happen. The reality is you can pray to God all you want, but you got to row for sure. And I think a mistake people make is they sit here and they say, well, if I think negative, bad things happen. If I think good, that good things will happen. It's not that kind of a correlation. What I will tell you is that, again, people are connecting too much to what happens in the market. We're up 300 and something points today, and people say, oh, it's a good day, the bad stuff's gone. Not at all. The bad stuff is still there, or maybe it's gone, but we're not going to know that for months from now. You need to disconnect from that.
Yeah, don't take it personal.
Don't take it personal at all. People identify that the market's out to get to them. I'm sitting here at CNBC. You maybe. You could be a little nuts, so it might be getting you. But I have yet to see anywhere on the screen Dennis's personal account and getting decimated. It's not a personal issue. The market is an entity. It's an organism.
It's been devastated, not decimated. Decimated is down a tenth. No, it's down like 50%, okay? All right.
Doug, always good to see you. Thank you
Great.
for your
very
words
much.
of wisdom
job.
and comfort as well. We
Thank
can
you.
only hope as well. Gang, see you later. And it's drdoug.com is his website there as well.